crise chegou. E agora? Agora você se informa, você pesquisa, você vê os números, você tenta ver o que vem amanhã. Agora você acompanha as lives e conteúdos diários do BTG Pactual, com grandes disponíveis até para quem não é cliente. Acesse.
Good evening to all. Good evening, Roberto. We are going to have a chat with the president of the Central Bank of Brazil, Roberto Campos. I already know him for a long time due to my years in the financial market, and Roberto has led the central bank during one of the most challenging periods throughout its history. And together with his team, has done an incredible job quickly reacting in a very effective manner in a scale that has never been seen before. The central banks of the so-called G7 have managed financial crises in 2008, 2009, and other years with all their instruments already solid. Here in Brazil, we've had a history of crisis as well and know how to act in challenging times. But now we are living a challenge that nobody expected, nobody foresaw. And the consequences are unpredictable and are starting to shape themselves. And this required new instruments, new scales, at a magnitude never seen before here in Brazil for this type of response. So in this sense, I would like to start by congratulating you and the entire central bank for this very important action during such a delicate moment. So now I pass the floor to you, and I guess you will introduce yourself, and afterwards we can start an informal discussion to talk about the economy, finances, and so that our listeners are certainly very interested in hearing you. So thank you very much, Roberto. Good evening, and congratulations for all the actions that you have taken with the central bank. Thank you very much. Thank you, André Esteves. Thank you, Pactual. So thank you, BTG Pactual, for the invitation, and André Esteves. And thank you to all our listeners. The idea is to do a retrospective, discuss what we saw, what we are seeing, what our plans were, and why we reached where we are, and what we have moving forward. So we were coming in a pre-COVID era, mainly in February. We were growing around 2.4%. And in looking back, I think this was above what we expected. So the first 2 months of the year, we were doing a bit better than we expected. And then we started facing this problem of the coronavirus. And there was a perception that there was something in China that could expand to Asia. And before getting into this, I want to talk about our agenda. And it's important to mention that our agenda continues moving forward. And we have the BC Hedge agenda, and this has to do with transparency and moving forward with all the projects that we have set forth. We are also expanding the cooperativism, microcredit, conversibility, the capitals market, and also the peak should also be rolled out in November. And we anticipated some programs to give liquidity by means of private debt. So we tried to anticipate a little bit this movement, and also real estate credit was also anticipated. So it's important to say that all the programs are continuing. And when talking to the large banks, I'm always willing to negotiate almost everything, but I'm not willing to negotiate postponing these measures that will make the financial system become more robust in the future. In all crises, starting with the Depression, the 98 crisis, the 2008 crisis, we basically see that the financial systems, they exit the crisis by having a swap, and you create a more solid, more robust system in the end. So we don't think this is a reasonable price to be paid. Much to the contrary, we need to seize this opportunity and expand some of the ideas that had already been introduced beforehand. So going back to COVID, we started at one moment to observe that this topic would be more robust, and we thought this was an Asian thing. And when we started mapping what was happening, we saw a greater concern in Europe. And two things started happening at the end of February that really caught our attention. We saw a greater exit of emerging markets. You probably saw this graph that is on the internet. So the emerging markets exiting more quickly, both in 98 and in 2008, it was much more accelerated. In Brazil, it was even more accelerated. So Brazil was 10 times above this. So we needed to understand that there was no external financing, and there wasn't going to be any. And besides this, we started to observe a drainage of the financial system coming from large companies that were withdrawing their credit lines from large banks. So we see some agents in the market already showing what the social distancing would imply for our economy. So we understood at that moment that we needed to start to act. So we were the first large central bank in the world that started to take some decisive steps towards this. It's important to observe that part of the people at that moment understood that this was an Asian crisis. It was not going to reach Brazil. And if it arrived, it would be irrelevant. And we would have this shock. But we already anticipated that this was going to be something more intense. So we started seeing the impact on the commodities prices. And then we started to understand what we needed to do. So when we look at what we have to do and what the world did in this coronavirus environment, we could divide this into 5 groups: liquidity, capital, direct transfer, taxes, so postponing or suppressing taxes, and credit lines. So we can classify all the aid and programs in these 5 categories. Usually it's the central bank that has this mandate that is more similar to the Brazilian. This is more restricted to capital and liquidity. We acted a lot on liquidity, and we also released capital because we understood that it was better to do more than less. So if we made a mistake, we wanted to make a mistake for more and not less. And if we made a mistake for less, we would have a social crisis together with a credit dry up. And this would intensify the problem. So the Brazilian Central Bank did more and first. When we take all the measures that we took, and later I'll break this down a bit further, it's important to understand that we had 3 great objectives here. The first one, I want the system to be liquid, that is sufficient to cross this crisis. I want this liquidity to focus where the liquidity drainage becomes more relevant for the economic effect. And third, we need to take measures that stabilize the market. So this is divided into capital, stability in the market. So everything falls into these 3 large groups. And this is how we set these goals. Then we started seeing that there was a problem of the money arriving at the other end. And if we should, in such an atypical moment, act in a stronger way. This is when we drafted the mandate which became the War Amendment Bill, and this addressed the public and private sectors. And later we can drill down into this. When we talk about the measures themselves that we have adopted, basically, we had compulsory 135 billion. We have already implemented this. We released an additional amount of 70 billion to the market. We flexibilized the LCAs, which had a potential of 2.2 billion, which was fully implemented. We did the loan program, the guaranteed LFIs, where we joined credit so that the central bank could give credit and also stimulate private loans, recalling that all the financing experiences had been backed by public money. And this was already a part of this hedge program that we anticipated. So we did the LFGs, and this has a total potential of 670 billion. And we also have another operation in the pipeline. And this is a financing line that has a potential, and we will improve this. And with the sovereign bonds, we already made 25 billion. We understood that this was very important to stabilize the market, and the DPGE, which is a special guarantee, small and mid-sized banks, we extended this to 200 billion. Only 3.9 billion were consumed, and we will have an adjustment which will be shortly announced to service these small, mid-sized banks, and also debenture-backed loans. This was an observation that we made. The debenture market is also talking to the financial sector. It was quite jammed, and there were some funds that needed to sell their bonds to make the withdrawals, and they weren't able to do that. And when we look at the credit curve, if the liquid credit starts having problem, you will have an increase in credit, and this will cross the entire curve. And what happens when the large credit receives a credit shock? The mid suffers double the shock, and the small ones, they disappear. So the central banks that act in this market, once you stabilize the better quality credit, you have an effect downwards for the mid and smaller size credit. So we did this. Regarding capital release, we did the overhead measure, and we also reduced the FCCP. I'm not going to get into many details here. We also reduced capital for credit operations for small groups, and this also has a potential of releasing a lot the market, and we think that part of this has already been absorbed. And we also did a credit line with the Fed. This is not very cheap for Brazil, but this is insurance, and it's good to have this. And one of the only programs that we did not do, which basically would use liquidity measures, was the payroll program, which had a potential of 40 billion, and until now we have done 2 billion. So we have a smaller outreach here. When we look at the impact that this is generating on the economy, I think everyone who has an economic department and looks a little bit at the macro numbers, it's very difficult to do a forecast in a very delicate moment like this because you lack data. The data collection is harmed, and you also have an uncertainty as to social distancing. How long will this last? What will the behavior be once you suspend this? We were looking this week, for example, at the curve of social distancing removal. Those who never had it, those who had it when they removed it, who is increasing, who's decreasing. We basically reached a conclusion that there is a fear component that people, even if they are not obligated to stay at home, they tend to consume services in a more selective way. And they also leave home in a more selective way because they're still afraid. So I think this factor will persist for some time. For example, today we saw news about countries that have already exited this but are thinking about going back to this, like South Korea, because they're having a second wave. And then when I talk about those 5 groups, liquidity, capital, direct transfer, taxes, and credit, capital goods, I think the government did a good job. Direct transfer, the 600 reais. We're talking about 3 installments of 600 reais, which is 23 billion. Caixa did incredible work in paying everybody in a very fast way. And when I talk to my peers in central banks in other countries, basically no other country was able to pay so many people in such a fast way. The U.S. has 6,000 banks, so that's a bit more complex. So I joke a little bit about that by concentrating, you can use the system, actually. The Canadian Central Bank president joked with Jay Powell in the U.S., and he said the only thing that we benefited from having everything concentrated is that we can do this much quicker. So this, in times of crisis, is great for the central bank, having everything concentrated. But in normal periods, this is not the most indicated. But later, I'll show you that there's another side to the coin. So we created this set of measures. So liquidity and capital, okay. Direct transfer is going well. Taxes, I think this was done in a more relevant way than most emerging countries. And also, the credit line is where most of the criticism comes from. Here we want to create programs that cover larger companies and also mid-sized companies. The central bank looked at the payroll for mid-sized companies. This program will be adjusted, which will probably be announced next week, so that has a greater outreach. And today we do a retrospective and see that the disbursement was small, and for some reasons, there was another program that was financing welfare pyramids, and there was also a Social Security aspect that took a while to be rolled out. And this product also covers the payroll. And the fact that you could not lay anybody off, some companies decided not to enter this. So we are working on some measures towards this effect. When we look at companies that benefited from this program, it's closer to 10 million. So this payroll product, it is more concentrated in companies that have a greater turnover than smaller. So we want to expand this and adjust this to cater for these outliers. So Brazil has a limited fiscal position. We need to design the programs in a more intelligent way. We need to try to find value for the assets and transform this into liquidity without generating a great fiscal cost. And we also recently debated very intensely on monetary policies. When we start to navigate in untraveled seas, we start generating a lot of new ideas. Many people start thinking Brazil should do this or that. And we have tried to make explicit our train of thought. In the last official communication, there was a great discussion on the lower bound. And we were very emphatic in saying that within the group, we discussed this very keenly. What does this mean in the mind of each member of the special monetary policy committee? And we tried being as transparent as possible on this. And regarding foreign exchange, we were able to intervene as we have done in the past. We understand that the fluctuating exchange rate is very good, but sometimes we are very off due to risk, and we are prepared to make a greater intervention. And recently, the exchange rate backed up a bit, And I understand that this variable will continue its volatility, and we will continue with our current strategy of acting based on separated goals with a fluctuating exchange rate. And we need to consider the relative behavior of the currency, and is this in line with the Brazil risk? So factors of this type are taken into account. We will improve our measures as we learn, and the measures that we have implemented, we will improve them. We should have a new set of measures. I cannot talk about them now. We want to have measures that are more focused and more direction, and we understand that credit is facing some difficulty to reach the end to small companies, for example, and maybe during the Q&A we can talk a little bit about this. And I would like to finish this brief introduction by saying that there are many tools, and we have a potential of 1.3 trillion, and we only did 260 million. The programs that have been rolled out, they have tried to reach out as much as possible, and that is our intention of generating credit, and say that credit has increased. If you look at the report that compare the central banks, you'll see that credit is dropping in most countries. And in Brazil, this is increasing much beyond 2019, where there was significant growth. So the demand is much greater than the supply. And I would like to thank all of you. This is an extraordinary moment that the country is crossing. And we always give the message regarding the economy and the central bank that we think that the COVID has some very important aspects to preserve jobs, to preserve the country and the economy. But what we have done allowed us to be here with low interest rates and with controlled inflation, and we will continue our fiscal regime. There is no low interest rate with low inflation rate with a controlled economy. But we are facing an unknown environment. We understand there is a learning curve in everything that is done, and we will use all possible tools to make the country exit this crisis in the best possible way. Thank you. Excellent, Roberto. Of course, we have a lot of questions. These are very interesting topics from the entire financial community in Brazil. And we're also translating simultaneously this live interview based on the interest on your talk. Let me start with credit. We saw that credit expanded beyond the normal. Part of this may be based on the programs that were readily implemented by the central bank. And these are used in other central banks around the world. They were improved and tropicalized for us, and they were launched in a very effective way. And credit is expanding. I would say that the fixed income capital markets is also contributing, but I think we are reaching a normal level. And there is a perception by part of the society, especially in Congress, which represents the population, that credit is not flowing to the real sector of the economy. So maybe this will be forced by legislation to expand this. And I think this is happening at a scale that has seldom been seen in Brazil. And I think the indicators will continue to show this. So where is this mismatch? Why is there this perception of credit expansion stimulated by the central bank? And this is becoming a fact. And why isn't this perceived by society at large? And I'm using Congress as the representative of society. Of course, in moments of anxiety and anguish, the representatives of the people, they try doing as much as they can for this to happen. So we don't want the real sector to suffer more than it already is, and we want to preserve companies and jobs. How do you see this dichotomy that is occurring, and how can we cure this? That's an excellent question. This has been the criticism, the number one critique to the government. Credit lines need to be accelerated. But looking at what the central bank does via the balance of the bank, the growth has been above 2019, and there are some myths and facts here, as in everything that happens in the way that it's happening. So one of the fears that is widespread is that banks are taking everything, they're not lending anything, their money's not going anywhere. No, that's not true. We can map everything in terms of liquidity, where the liquidity is, and where it's being allocated. So we can see, for example, in terms of new concessions, we can see between most companies, small and medium-sized companies, large corporations, and all range, we can see 21 billion new operations. So this is much above the same period of last year. So it shows that once you release the compulsory, credit starts flowing. So the first myth is that credit is not expanding. That's not true. We can show that this is expanding, and we have talked about this topic. So in terms of new contracts, we have 421 billion, and in terms of renewal, we have 131 billion. So everything that is rolled, we have an additional 531 billion. So the measures are occurring. This is the first myth. And the second myth is that public banks are making the effort and the private ones are retaining the liquidity and are not passing this on. This is also not true. When we look at new contracted loans at the same level of 441 billion, 80% is from the private sector and only 20% is of the public sector. So the private sector is increasing its credit. It's reacting to the central bank measures. The public banks, they have a specific niche. Banco do Brasil and Caixa Econômica, they work more in real estate, and they have renegotiated in the real estate area. So this is another point that we would like to clarify. And there's another one that is very important to understand, which is the relationship between supply and demand. A recent survey of Sebrae, which talks about the service rate with regard to credit requests and the request for credit, we can see that the demand from lower sectors is several times that of a normal period. So depending on the sector, you will reach the conclusion that the demand now is at 200 or 300% above what it was in 2019. If you have a credit expansion of 20, 30% with a specific sector and the demand is 300 times greater, you will always have the feeling that the demand is not being met. So if I wanted to meet the entire demand at the same rate that it is done in a normal credit environment, I would have to double the capital of banks. We didn't do the exact math here. The back of the envelope account. But companies that are crossing a period without any cash or cash flow, so this is an atypical demand. And another point, just to finish off, is that there is the myth that the small ones, at this moment, they retract. This is not happening. Much to the contrary. We need to understand that credit pricing is asymmetric to the amount of information. So if I know my client better, if I have more information about my client, what happens during a moment of panic, I will be better able to assess this client than a person that I know less. So once again, going back to the Sebrae survey, if you take small and mid-sized companies and you take their percentage of the credit that has been met, the private banks have served at 12%, and cooperatives have serviced 31% and public banks the rest. So once you know your client better, you will be able to better service them. And once you have more information, you're able to fight this. So these are the myths that we work with, and we understand that it's important to clarify this and work to improve these things that are underway. Some feedback on credit that I agree with you. Credit is expanding, and even when compared to historic patterns, and it is strongly concentrated in the private sector. So the banks, in response to the central bank, are expanding credit. Feedback to the central bank. A relevant portion of credit demand has not been that immediate demand of this quarter or the next 2 or 3 quarters. Some people are preparing for a liquidity buffer. This is quite interesting. Some companies from a certain size up and access to the market, I think we are at an open situation. There was a lot of access to credit, and many companies are preparing for more adverse times down the road. So just a comment to enrich this discussion. I'm going to change a little bit the focus here. You talked about the Monetary Policy Committee, the Copom, and congratulations for the transparency and explaining this to the market. But I have 2 questions here about the same topic. As you mentioned, the central bank cut the prime rate by 0.75 and signaled another 0.75 cut. From then on, we had a perspective of growth. The last prime rate was at 3.8%. And unfortunately, I think it deteriorated. I think it's 6.7, and maybe there will be some adjustment downwards. And there was an inflation perspective that is becoming lower. At the same time, the exchange rate settled down a bit, and the current account inverted. So these are the variables that are the main indicators for the prime rate, and they moved on in a certain direction. And you talked about the low and bound concept. My 2 questions are, how does this more demanding scenario for an expansionist prime rate policy talk to the low and bound? I think this needs to be a daily reflection of the central bank. And if there is a low and bound, or if we're close to it, which instruments can the central bank use to deal with this situation? Can we do a forward guidance like several other central banks around the world have done? Can we do curve interventions like the War Amendment Bill? Do we have the power to do this? One thing is to act. The War Amendment Bill, it has 2 aspects. One, in an extreme stress scenario, the central bank or the Treasury participates with much more intervention power to maintain the markets working and the prices within reasonable. And another scenario is where you have a greater need for monetary expansion. Then you use this in an offensive way. So one would be defensive, the other one would be offensive. So first, let's reflect about the lower bound. When we had a scenario moving in the direction that I mentioned, and second, which mechanisms could we use, if at all existent, to deal with the existence or presence of the lower bound? Excellent question. I think this was the great debate. From then to now, I would just say that we had a growth that would be maybe a little bit smaller now, but we had a great degree of certainty. We had an average expectation from the central bank that was doing well. Now we have a greater amount of uncertainty. Now I'm getting to know my tail risks. So one thing is compensating the other. But the main question here maybe is, first, should we cut this and leave the store open indefinitely? And then the response of many would be, we are seeing this effect in the market. We think that this may be counterproductive at some moment because we can try to do a financial release, and this will generate an opposite effect in the financial market. So we need to acknowledge this factor does exist. We don't know exactly what the point is, what is the inflection point. This is a dynamic equation because it depends on several things at the same time. So having more resources in one situation will generate one result. If we have a greater political crisis, it will also affect. So we need to understand that this is always dynamic. Second, we need to communicate that we are debating this. And then this raises the question, so what is the lower bound? We try reflecting, but different members have different opinions. Maybe this is very complicated to go below a free risk level, below the international level, but maybe the Brazilian risk is greater. Maybe you should use this number. Maybe the yuan should be our reference. Maybe this currency doesn't have much liquidity. If I have a prime rate that is below this, maybe I am interfering with the savings accounts. Maybe we should look at the slope of the curve. And we also have the perceived Brazil risk. So it's a debate about the lower bound. Is there a lower bound? Yes, there is. We need to price this relative risk. This is the first point. We also made it clear that there was a member that understood that there was a lower bound, but the market needs to find its natural balance. If we have dropping prime rates, we follow with this, and once the market restructures, you will have a premium, and then you need to renegotiate it. If you think there is this natural balance, regardless, what is the price of this natural balance for economic growth? Then you need to smoothen the cycle, and the central bank needs to try to smoothen this. So this is what we try to reflect in our minutes. And what about the other instruments? How do they work? What does the central bank think about these other instruments? We think that the monetary policy has not been led to exhaustion. Using other tools would create a risk premium than going beyond the traditional tools. So looking at the side effects that we would have, we decided to rank what we understood to be important in this sense. Then we have the question. If you really are in the situation that you believe that there is no more space for this, well, this is like taking a toolbox, analyzing and saying, okay, what is my priority? Then you analyze the cost-benefit of the instruments that you have at hand. In our opinion, it seems that the cost, if the collateral cost of having a crisis, we don't think this is a scenario, but if it occurs, it generates a much greater crisis, and the collateral cost of importing would be acceptable. So later you can come back to this. We discussed widely on the monetized effects, not monetizing. What is the effect on the exchange rate? So how does this disarrange the economy? What is the effect of generating a message that your inflation is too high or too low? So you use these instruments to generate money, and when you're on the opposite side, so does this generate confusing messages? all of this was discussed. So we understand that there is space in the monetary policy, and using other instruments before being certain that these measures have been exhausted. This may generate a greater loss than trying to test these instruments. So this is our way of thinking. Very clear, and I agree. So the priority should always be the simplest path forward. So I endorse your train of thought and the other members of the Copom, the Monetary Policy Committee. And afterwards, we should first analyze what has been used in a successful way. But you mentioned the currency or the exchange rate. And here in Brazil, we face a very interesting situation. We have a balance where the country is bought in dollars, placed in liquid reserves that is greater than our foreign indebtedness. But we have an interesting reversal in current accounts. And some analysts, they see a surplus over the next 12 months. And we don't have any demand of a real sector in the economy for dollars or hedging, etc. But we observe the performance of the real this year much worse than comparable currencies, and unexplainably worse. Looking from several different angles, maybe we have a gross indebtedness, not net indebtedness. But under any optic, we have this question. We are worse than comparable currencies, other countries or economies that are very fragile. For example, Turkey, South Africa, or even looking around Latin America, we have countries that depend more of this or that commodity and turbulent political scenarios. But our currency demonstrated a worse performance than these others. Of course, the currency fluctuates, but there's always this sensation that this currency is a symbol that took a while to internalize as value. But we saw this interesting movement more strongly so in these last 10 days. Maybe now it's more rational in these last 10 days, but we are still facing worse performance than comparable foreign exchange currencies. But my question is, how does the central bank, seeing this atypical behavior of the Brazilian currency, not comparable to other currencies? Excellent question. We have faced several phases. It was atypical in several different ways. Some did not impact the risk as debt payments. This left us in a comfortable situation this year. Only 4% of the corporate balances were not postponed. So a lot of debt swap. So we went from 12, 13 to 4%. So companies are more prepared for this valuation. And then we look at the risk premium that is compatible, and this is widely linked to fiscal, as you already mentioned. You look, for example, at countries like Chile and Peru. Their exchange rate response to interest and their shock in this regard is smaller. So fiscal, it has a great relevance. And in Brazil, there were some elements that were atypical that made this flow present greater distortions. And we that work in the financial market for a long time, maybe you as long as me, or maybe you even work longer for this, we think that it's very important to map this flow. There was a movement of banks trying to cover the fiscal arbitrage called the overhead. And when the exchange rate went up, this would make this more evident. We took a measure that postponed this, and we knew that we had to do this until the end of the year. And we mapped that there was a purchase of some market agents in this sense, and the flow rate of foreign buyers and local buyers was balancing out. And we understood that at some point, from a risk standpoint, we knew that this was proportional to Brazil, what is proportional to our fiscal standpoint, and what is atypical in terms of a flow. And there was a clear indication at some point that the external accounts were reacting in a more favorable way, and we understood that the players would understand this at some point, and the foreign investors, they started to position themselves in an opposite direction, and this started making more sense. And I received a text saying that a colleague of mine was very concerned about these players. In a current account, 50 billion negative is quite concerning, but we're looking at all the dividends. We look at the direct investment factor, and even if it drops a little bit, it's going to be compensated by the hedging. So we understand that the market would also identify this at some moment. This is what happened. The exchange rate improved. I think the institutional aspect, the market also sees that despite the government being able to find a way of working, when we look at the fiscal aspects, we saw the Social Security and the payroll that constitutes a third pillar with a lower interest rate, and we have followed this story. I think this is developing. In the second semester, we will be able to approve some more reforms. So I think this was the movement. On our part, we're very keen on this, and we understood that at some points we needed to act very more strongly, and we were also mapping the flow, and we understood that at some point this balance would play out, and it happened pretty much in line with what we expected. I agree with your analysis. We mentioned the debt. Brazil has a long history, which is correct, of measuring our indebtedness by our net indebtedness. At some point, we started questioning certain instruments or the differential of the accounting of net and gross indebtedness, and we started looking at the gross indebtedness. This in recent years. Shouldn't we go back to looking at the net indebtedness? Aside from our hedge funds in foreign currency, maybe we have a hypertrophy of public banks and hybrid instruments, and this brought forth a legitimate discussion on the money worthiness of these assets. This past is maybe already behind us. The public banks that I'm talking about are BNDES, hybrid instruments used at other federal banks as well. They are decreasing. And the difference between gross and net debt are the reserves. These are net debts, and these are mainly comprised of U.S. Treasury bonds. Shouldn't we look? It doesn't make sense to look at the net indebtedness anymore. Maybe Brazil is well positioned, but at least it's not as poorly positioned as it used to be. What do you see about this? I'm handing over a manifesto about the net indebtedness. Even during debates with the Minister of the Economy and other people, we have looked very keenly at the net indebtedness. Then we had a period of creative accounting. So we would base ourselves on other balances that were not accounted for. So we had BNDES, Caixa Econômica, And then we would create hybrid instruments where you had accounting and then we had selective accounting, and the market stopped believing in all these concepts. So then we decided, okay, let's look at all these products, all these net products, and we needed to look at the delta of what was happening. And now we are able to see the delta of what the government is doing in terms of unaccounted for expenses. What we have done in recent years, already a little bit in the Temer government, was to pay back all of this, return all the credit, and what is left over of the gross to net debt is the reserve. So when we do this comparison, it's as if we are looking at the balance sheet of a company and the assets and liabilities. Another very distorted conception is that when we look at an asset liability sheet, how do we assess our assets and liabilities? If we look at our surplus or deficit for Brazil, this is a mirror of our dollar reserves times the exchange rate. So what we have is a reserve plus a gain, and basically this is financed with indebtedness, different from other countries where they finance this with the accumulation of the flow. We did the balance of surpluses and deficits, and in the end we have an indebtedness and an asset. So this is very important because this concept becomes much more relevant. Imagine that you have an asset that is 20% of your GDP and you gain 25%. So 25% of 20, so you have an effect of 5% of your net indebtedness, which is not incorporated into your gross indebtedness. Another point that is very relevant. This motivates these ideas that exist, that I can take my reserves and use it to pay this or that, or finance this or another project. If you have a company that has an asset and a liability, and you finance your asset with a debt, if you sell this asset to finance another project, you remain with your indebtedness. So in this case, you're issuing more indebtedness to do the project. So your balance sheet will remain the same. So it's important to mention this. It's also important to mention that this accounting, the profit that remains in the central bank when the money is returned to the treasury does not influence the net or gross indebtedness because it's already accounted for from one side to the other. So it is transferred from here to there, but it doesn't affect any indebtedness. These are nuances. Brazil has this indebtedness accounting based on reserves. And since Brazil has a much greater reserve than many other countries, and we don't have remunerated deposits, we have this kind of really delicate situation. I agree. As we agreed, so that we stay within 1 hour, I'm going to ask my last question. This is a philosophical or theoretical debate, but it's getting very close to practice. In the G7 countries, this is moving forward at a pretty nice pace, which is the monetization of the debt, or the possibility of doing so. When the central bank gained the right to intervene in the market, mainly in the public market, obviously this debate becomes quite heated in Brazil. We saw some articles about this from economists here in Brazil. And I myself have great concern about this because I think this debate is quite dangerous. But to a certain degree, this can be quite welcoming for the central bank to act in a defensive way, not offensively. Eventually, offensively may also be valid, but monetization is like an alcoholic that took 20 years to recover. And I'm afraid of going to a wine tasting session. So how does the central bank see this debate, even though theoretical, but it's becoming practical, it's becoming very real during this period. And here in Brazil, this was the case for a period of time. So how do you see this topic? It's pretty much like you mentioned. It's almost a wine tasting session, but it's natural after a long period to call this wine tasting. So you are being tempted. But speaking seriously, we understand it in the following way. We have a toolbox with several tools inside. And then it goes back to that previous question. So what is our objective first? Do we want to create monetary policies with this, or just open space for spending capacity? So what is our final objective? As a central bank, we understand that what we conquered by means of my predecessors who fought against high inflation, they made great efforts and great sacrifices, and this generated lower growth years. And very slowly they gained credibility. So we understand it is very difficult to start testing more riskier tools if we understand that this is far from being necessary at this moment. So we understand that monetary policy has not been exhausted, but there are ways of acting with treasury bonds. But we don't necessarily have to monetize our indebtedness. But we understand that this is a very dangerous variable, because we will go back to the wine tasting and probably you'll get drunk again. This instrument, once used, is very comfortable. You have zero present cost, but this will affect your credibility for future generations, and this is not fair for us to decide, and we do not have the right to use without knowing and being sure that we did not exhaust the other options. Your words are very soothing. So I will close our discussion here, and once again would like to thank you for your presence and all our viewers as well. And I would like to congratulate you for leading the central bank through such turbulent times and some unexplainable times, not just in Brazil, but globally. And the central bank is always that hand close to action, and its competency sets us at ease. I think, unfortunately, we are now reaching the toughest part of the economic challenge, and this does not lessen the central bank's role, but I think you have done this in a very sober way and a very responsible way. Thank you very much, Roberto, for being here. Congratulations for your work, and congratulations to the entire central bank staff. Thank you very much, BTG Pactual and André, Esteves, and to all our viewers. We will continue doing this work that we have done so far, and I am confident that we will cross these turbulent times, and we will announce probably new measures very shortly. We're very concerned about credit for small and mid-sized companies, and we want to balance supply and demand, and we're very concerned about the small businesses complaining they're not being serviced. And within the measures available to the central bank, we will do what we can. So once again, good evening to all, and thank you for the opportunity.
Boa noite. Tchau, Roberto. Tchau. A crise chegou. E agora? Agora você se informa, você pesquisa, você vê os números, você tenta ver o que vem amanhã. Agora você acompanha as lives e conteúdos diários do BTG Pactual, com grandes nomes do mercado sobre o agora. Disponíveis até para quem não é cliente. Acesse btgpactualdigital.com/lives. A crise chegou. E agora? Agora você se informa, você pesquisa, você vê os números, você tenta ver o que vem amanhã. Agora você acompanha as lives e conteúdos diários do BTG Pactual, com grandes nomes do mercado sobre o agora. Disponíveis